previously examined Code Section 351, Transfer to Corporation Controlled by Transferor, the non-recognition provision for shareholders, and a property for stock transfer. In this lesson, you will learn about basis determination and holding period for property transferred under this code section. You will then apply these concepts to Sunchaser Shakery. You might recall from a previous tax course that special basis rules apply to non-recognition transactions, such as like-kind exchanges. The objective of these rules is to defer, that is, delay recognition, not completely forgive a gain or forfeit a loss. Thus, as a non-recognition event, property transfers under Section 351 are subject to special basis rules. Specifically for shareholders, Section 358A1 stipulates that as a general rule, the basis of the property received in a Section 351 transaction shall be the same as that of the property exchanged. That is, the shareholder's basis in the stock received equals the shareholder's basis in the property transferred to the corporation. For example, if an individual transfers property with a basis of $500 to a corporation for stock in a Section 351 exchange, the individual's basis in the stock will be $500. In other words, the basis is exchanged. In practice, this is referred to as exchange basis or carryover basis. However, you will soon learn about several situations in which adjustments to the general rule of exchange basis are necessary. Thus, more broadly, the shareholder's basis in the stock received in a Section 351 transaction is the basis of the property contributed, plus any gain recognized on the transfer, less the fair market value of other property received besides stock, called boot, less any liabilities assumed by the corporation on contributed property. You will use this formula quite a bit going forward. Relatedly, Section 1223(1) defines the holding period for stock received from a corporation in a Section 351 transaction. Basically, when a transferor, that is the shareholder, receives property with an exchange basis, such as stock under Section 351, the holding period of that stock includes the holding period of the transferred property if the transferred property is a capital asset or a Section 1231 asset. In practice, this is often referred to as tacked holding period, as it is tacked on to the holding period of the transferred property. In other words, the holding period does not include the holding period of a transferred property that is not tacked if the transferred property is an ordinary asset, such as inventory or accounts receivable. In this case, the transferor shareholder's holding period begins from zero at the time of the exchange. The rules so far focus on shareholders, so let's now consider the exchange counterparty, the corporation. In a Section 351 transaction, the corporation steps into the shoes of the transferor shareholder when determining basis in the property received. Specifically, Section 362A provides that the corporation's basis in any property received in a Section 351 exchange shall be the same as the shareholder's basis. However, as in the case of the shareholder, there are situations in which adjustments to the general rule of exchange basis are necessary. Thus, more broadly, the corporation's basis in property received in a Section 351 transaction is the basis of the property contributed by the shareholder plus any gain recognized on the transfer by the shareholder. Some other adjustments are also possible. You will learn about them in the next lesson. Finally, Section 1223(2) states that in determining the period for which the taxpayer has held property, however acquired, there shall be included the period for which such property was held by another person, if such property has the same basis as it would have in the hands of such other person. In other words, if that property has an exchanged or carryover basis to the corporation, then the holding period carries over or taxed to the corporation as well.